Good afternoon, everyone, and welcome to another PSE's Stock Market webinar. I'm John Garcia from PSE's Market Education Department. We are glad to have you with us. So, in the past, we've conducted a lot of webinars already. So many episodes also here in 2021. We have covered a lot of specific topics so far, especially about stock market investing. So, we have broadened our perspectives not only from the point of view of investors, but also for the point of view of potential capital market participants. So we did a webinar about starting a career in the financial markets. We also debated about trading versus investing. Ano bang mas maganda? In today's webinar, let's take a step back and have a holistic look at you, the investor. So ano bang investing style fits your financial goals? So our webinar today aims to enlighten the audience on how to understand these investing styles and ano bang investing style ang suited for your risk appetite, your financial goals, and with that, ano bang mga investment opportunities ang available sa inyo. So are you guys ready? I'm very excited. So before I introduce our resource speaker, let me run a few reminders for our participants. So please note that this presentation is for educational and informational purposes only. This should not be construed as a professional, financial, or investment advice or recommendation from the PSE. Okay, so right now it's 4:09 p.m. and we have over 200 live viewers in Facebook and Zoom combined. So thank you everyone for investing your afternoon with us. So as you've probably seen in our event poster, we have invited a speaker from Sunlife Asset Management Inc. So allow us to introduce her today. Okay, so si Queens Ornedo is a territory manager in Sunlife Asset Management Company Inc. or SLAMC, covering 30 branches in Metro Manila with over 950 financial advisors. She has over 12 years of experience in wealth management, catering to high net worth clients. During her early years, she was a liquidity and fixed income trader for a boutique investment house and later transitioned to becoming a sales trader for Metro Bank Treasury Group, where she distributed fixed income, derivative, and equity products for high net worth clients. Her last stint before joining SLAMC was a relationship manager in Citibank. She was also an athletic scholar and graduate of De La Salle University with a bachelor's degree in economics. Ladies and gentlemen, please help me virtually welcome our guest this afternoon, Miss Queens Ornedo. Hi, Queens. Good afternoon.
Hi, good afternoon, John. It's so nice to be here and thank you for that introduction. My gosh, naka-spotlight pa ako, so buti na lang nag-makeup ako today. So.
Syempre. Prepared ka today, Queens. Ha?
Oh gosh, oh yes.
Well, we're really glad to have you with us, Queens. Territory manager, parang napakalaki ng scope, napakalaki ng ginagawa. Ano ba ang territory manager for SLAMC?
Oh, thanks for asking, John. So, in Sunlife Asset Management, so there's three distribution arms. So, three distribution arms to distribute the mutual funds business. So, we have the banks, the agency sales, and we have the institutional business group. So, I'm representing the largest group, which is agency sales. So, we have about, in Sun Life, we have about 84 Sun Life branches were over in the Philippines. No? So, that's about accounting for 2,400 mutual fund licensed advisors. So, being a territory manager, so I'm tasked to handle a cluster of branches, like what you said, 30 branches. So I'm handling 30, and there's about 900 plus of them that are mutual funds licensed. Our business initiative is really to distribute the 16 mutual funds to our stakeholders and grow the SLAMC business in terms of AUM for all of these funds.
So in my understanding, ang inyong clients are really retail investors, the individual, everyone de la Cruz.
Yes, everyone de la Cruz, every H&W1 de la Cruz, and corporate clients as well. So may mga iba, samot-sari siya.
Ayun, so very perfect for our audience. Okay, Queens, we are very looking forward to your presentation. The floor is yours.
Okay, thanks, John. So allow me to share my screen, and I hope you guys can see it. So again, good afternoon, John. And thank you for that introduction, and good afternoon to all our fellow viewers both in Zoom and in Facebook Live. Live po tayo, Luzon, Visayas, Mindanao, and outside the Philippines. And I'm happy to be here to basically amplify our audience with some investing styles that may suit your life goals. O, diba, John? So let's get started. My name again is Queens Ornedo. For those that weren't able to come in earlier, so I'm here to talk about investing styles. Which one is for you? So it's all about getting to know yourself, what you really want in life, determining your life goals, and knowing your whys before you invest. So this is just a thought that I want to throw into the audience, and just a thought. Have you ever wondered what the world would be if we all look the same? Parang today, we all look the same. Pag nakamask tayong lahat, behave the same, and had similar traits. So imagine all of that, and that it's spooky enough to actually think about that we're all doing the same thing all together, no? But that's highly impossible, and the uniqueness of each individual complements each other, making us a stronger race as one. So just imagine that, no? Samut-sari, ibang-iba, iba-iba in terms of behavior, iba-iba in terms of how we move and our race and everything else. Geographically, we're also different. And when you combine everything, we are stronger together as a race. So this afternoon, we'll be talking about investing styles, knowing your whys, the whos, the whats, and the how. We'll be tackling your financial goals, the risk profiles, asset classes, and asset allocation, and a story out of all those so that we can arrive to determine that holistic approach that John is saying. And in Sunlife Asset Management Company, we have what we call 4 pillars of lifetime financial security. So in no particular order, we'll be discussing that. But let's get to this. And earlier we mentioned that the uniqueness of different individuals really complement each other and makes us a stronger race as one, diba? And and it's the same with asset classes. And similarly, a mix of different asset classes through asset allocation is a key for a strong and diversified portfolio. So earlier on, John made a poll to address that question. For those that are actually invested, where are you invested in currently? So now I'm throwing in a question, and I hope you guys can participate and use the chat box function. I think in Facebook Live, you can also use that chat box function there in Facebook Live. But in Zoom, please use the chat box function to answer amongst all of these asset classes: property, commodities, bonds, cash, equities. What do you have all together? Kasi kanina yung tanong is that ano lang doon sa isa ang meron kayo. So you guys can write your answers, and I can start it off. I have bonds, equities, properties, and cash. Okay. So I have that. And I want you guys to participate, and feel free to jot down what you guys have. No? Combination of all 5 or some. Wow. May isa sumagot, all including crypto. May iba doon, equities, cash, real estate, property, classic cars. Wow, collector. And then we have also equities for now. Some are combining equities and cash, properties, cash, equities. Most of them are saying equities. Merong nagsabi ng all. So are you pertaining to even commodities? So baka may gold siya, di ba? So all excluding commodities. So thank you guys for participating. Good answer. So why are we addressing all these questions though? We have to tackle all of these, regardless if we're in that moderate stage of knowledge, no, in terms of these asset classes. Kasi may mga iba sa atin na maybe they want a refresher, they want to be reminded. And let's start clockwise. Property. Okay. Property is basically real estate and a physical asset that's considered to be an asset class also. And normally, that's whether residential or commercial properties, and it offers protection against inflation. Tangible in nature, it also leads to be considered as a real asset. Kumbaga, di ba? Commodities. Commodities are metals, energy, and agriculture traded in an exchange. And the most common one is actually gold. It's considered a safe haven, no? But then, here in the Philippines, we don't have that much, and that normally the storage here in Asia is in Singapore and in Hong Kong. So kung gusto niyo bumili ng gold bar, ayan, pagdating sa gold, doon nyo siya isa-safe keep sa Singapore or in Hong Kong, di ba? Now, bonds. This is very, very close to my heart because I used to be a bond trader. So normally, these are debt securities that pay a rate of return in the form of interest, whether it's annually, semi-annually, or quarterly. And such investments are considered less risky than investing in equities or commodities for that matter because it promises or states a rate of return to compensate the borrower for lending the money to the issuer of that fund. So the bonds are actually classified depending on the issuer, whether it's a corporate bond or a government bond. So if you've heard about a retail treasury bill that's issued by the government, or if you've heard of an Ayala Corp bond that's issued by Ayala Corp, so that's called a corporate bond. Okay. So it has different tenures, it has different tenors, just like when you borrow money, di ba? May mga hangganan yung mga yan, may mga maturity na yung mga yan. Or for some, may iba naman perpetual as what we call it. Now, let's move on to cash. And this is considered the least risky, no? The primary advantage of cash or cash equivalent investments is their liquidity. So in Sunlife Asset Management, we have what we call money market funds. So money held in the form of cash or cash equivalents or money market funds in Sunlife Asset Management can be easily accessed at any given time. So in Sunlife Asset Management, we just have a holding period of 7 days. Pero after nun, you can access it at any given time, just like how it is with a savings account. And it's considered the least risky asset. But of course, we have to also remind everyone that because low risk, low return din siya. But it's more stable compared to the other equities traded and asset classes traded in the market, diba? So we have equities. Equities are shares, or popularly known as stocks, or shares of ownership issued by publicly traded companies. So they are normally traded in a stock exchange such as PSCI or New York Stock Exchange, and you can potentially profit from equities or stocks either through the rise of the share price or by receiving dividends, and that the asset class of equities that's often divided or subdivided in terms of or based on market capitalization. It is divided into whether it belongs to the small cap, to the medium cap, or the large cap stock. So on the average, large cap corporations or stocks, these are stocks with market capitalizations of about $10 billion. We're talking about dollars or greater, and that tend to grow more slowly than mid-cap companies. And mid-cap companies are those with capitalization between $2 billion to $10 billion, while the small cap corporations have between 300 million to $2 billion. So imagine the size of the listed companies abroad. But US alone has more than 4,000 listed companies in the New York Stock Exchange. That's how massive it is, and it's considered to be the largest stock exchange in the world, with an equity market capitalization of over $25 trillion. Diba? So if you compare, no, locally here in the PSCI, we're growing. We have about 275 equity names already and counting. But worldwide, if you're curious, there's more than 41 listed names. So syempre, as an investor, hindi mo mabibili isa-isa yun, no? And that's why, that's the power of a mutual fund. You're able to actually bundle a lot of equity-laced stocks there in that mutual fund so that you're able to capitalize on that and bulk it up so that investors can get into it and invest, no? So there's what we call, value investing and growth investing. So ito naman yung mga two different investing styles that we normally get a hold of. And normally, value stocks present an opportunity to buy shares below their actual value. So si paring Warren Buffett is very, very known for value stocks because he normally buys something that's undervalued, and later on, you'll see it that he's been growing massive wealth because of these value stocks. Diba? And growth stocks exhibit above average revenue and earning growth potential. Now, for those on the aggressive side, and earlier on, John had a poll in terms of the risk profile, no, that you guys have. Yung iba conservative, yung majority are moderately aggressive, tapos yung iba naman nasa aggressive side. So on the aggressive side, you normally would have a toss between choosing between an actively managed fund or a passively managed fund. So an actively managed fund would be those funds that are managed by fund managers, essentially, which requires frequent buying and selling. The aim is to really outperform the specific benchmark or the index. While on the other hand, you have the passively managed fund that just really tracks or replicates the benchmark or the index. So that's what we call index funds, diba? So of course, actively managed portfolios, those are the ones that really aim to strive for superior returns. But of course, what we want to caution our investors right now and our audience right now is that it takes greater risk and entails larger fees. And now lastly, international equities. What's this all about? No? Basically, international equities are non-US equities. So yun lang yun. Hindi siya sakop ng US equities. Nasa Europe siya, nasa ibang bansa siya listed. Ganun siya. So I hope you guys get an understanding of this. Kasi dito pa lang sa slide na to, medyo bigatin na in terms of that. No? So earlier on, I mentioned mutual funds. No? And the convenience of mutual funds basically addresses a pool wherein asset classes are combined in one fund so that an investor or a shareholder may be able to access it. Diba? So all the way segregated from low risk to high risk, from left to right, depending on your time horizon, whether short term, medium term, or long term, it's segregated into that. So a lot of you earlier on mentioned that you have some mutual funds or do IPFs. So of course, you guys are well versed with this one, where money market funds are normally considered the less risky, because it's just really invested in the cash savings accounts and also some time deposits across banks. What you're leveraging on is the power of the fund, the size of the fund, so that it can command better rates. So on the medium term side, in terms of time horizon, and then for the risk, it's considered moderately aggressive. It's the bond fund and the balance fund. So the bond fund alone, it's the one that we discussed earlier, wherein it's either the government funds or the corporate funds. And then balance fund, it's combining both equities and bonds. So you arrive at a diversified mix already. So kung ikaw yung type of investor that doesn't have time to actually monitor the equities or the bond fund separately, and you want to combine it and put it in a balanced fund, that's you, diba? Provided that you're in a moderately aggressive risk profile. And lastly, for the bold and the aggressive ones, the equity funds, we have what we call listed companies in the Philippines and globally listed companies. So you have an offshore fund, an onshore fund. So we mentioned risk, and this is something I want to highlight because the risk approach of an investor plays a significant role. Bold and beautiful. Why? Because risk is considered a double-edged sword. So why is it called a double-edged sword? So parang queens, bakit? Kasi too little risk may slow down the returns one needs to achieve financial goals. So, ayaw mo naman na sobrang conservative ka, pero yung financial goal na gusto mong ma-attain, ito. Diba? Kasi kung napaka low risk ng investment ko, pero your goal is magnanimous, it might take a longer payback period for you to actually earn that return to be able to achieve that financial goal. Now, on the flip side, too much risk may also result in one's financial goals not being met. And you know what? If masyado kang fear of missing out, you may also be exposed to volatility and uncertainties in the market. And that's what we're avoiding. No? Normally, those that have too much risk have also a mismatch in their financial goal. Essentially because what they're aiming for is, itong financial goal ko, I want to reach it in about 1 to 2 years time. But that investor is exposed in equities, which is volatile, and that may erode the returns or the principal, for that matter, of that investor, no? And that might not be able to be utilized to pay off whatever needs to be paid out short term. So that's why this is where asset allocation comes to the rescue. It's like your rescue squad, so that your roadmap, your financial goals will be addressed. No, so to address that, you have to know your whys. No, Why are you saving up for the short term? What is it? And the investment outlets you choose are highly dependent on your financial goals. No? Yung mga investments na pipiliin nyo later on, it's anchored into your financial goals. Whether it's short term, that's achieving it in less than 3 years, medium term, achieving it in 3 to 5 years, or long term, aiming to achieve it in more than 5 years. So the correct asset allocation basically addresses the short, medium, and long-term financial goals. Case in point, a holiday or a travel. Diba? Alam natin na short term yan because most likely in 3 years time or even less, we might be able to travel. Pero dapat bakunado na kayo guys. Highlight lang, disclaimer lang. Pero syempre yung mga iba, di ba, pag natapos tong bubble na to, lahat kayo itchy na. Nangangati ng mag-travel. Yung iba dyan, baka nagtabi pa ng dollars kasi akala nila makaka-out of the country na sila. And you know, you never know when to use it. And that's why some investors, they opt to park it first in short term so that at any given point, they will be able to use that without, you know, worrying about the volatility of their investment. Or more common are amortizations. Diba? Amortization ng mga bahay nyo, month on month, even your car amortizations month on month, you have to put it on short term. Why? Because every month, kakailanganin yung bayaran yung amortization na yun. Even rent, diba? And that's why, you know, you cannot be exposed to volatility. That fund or investment cannot be exposed to volatility, so that you will be able to use that for the short term. Diba? Medium term. A classic example is buying a car. Can't decide now. You can't decide probably next year kasi alam mo, may inaabangan kang model na lalabas kay Toyota or kay Ford or for that matter for Honda for that matter. No? And so that's why it requires a bit more time, a longer decision making for you to be able to consider what to buy. No, it's not like buying a bag. So medium term, buying a car, in 3 to 5 years, you will be able to determine and pay for it already, no? And decide on it. And when you do, it takes longer to actually pay for it. Yung iba dyan, nagla-lump sum. 1 million. Gusto ko cash para wala na akong babayaran na amortization. Yung iba naman staggered. Half. 500,000 muna, tapos kalahati 500,000. Yung iba naman, maglo-loan. So it really depends. But altogether, buying a car would entail a bigger amount, and that is why you need to save up for it a much more time, no? So that you will be able to accumulate funds enough to buy for that car later on. Now let's go long term, no? Kung parehas tayo ni Hidlin na nanalo sa Olympics, bukas may bahay ka na. But sad to say, I don't have the muscles for that. But you know, it requires longer time for you to actually pay and build a house. Sometimes it also takes a lot of planning because you want to build a house later on when you reach a certain life stage, diba? And that's why it's more than 5 years down the road to be able to consider that. And for that, you can afford to actually park it in equities or even long-term asset classes so that over time, it can grow. And by the time that you need it, you will be able to have that money to fund or make a down payment for a house. So I'm sure you guys are relating to it, no? And in financial planning, we always take into consideration the person's needs and lifestyle changes. Nag-iiba-iba po ang lifestyle changes natin, no? Nag-iiba din yung mga needs natin, yung wants natin. Nagdadagdagan ng mga kasama sa buhay. Nababawasan din tayo ng mga kasama sa buhay. Yung mga ayaw na dyan at nakipag-break during the pandemic and all of these things. Yung mga nanganak at nagkaroon ng baby during a pandemic, yung mga nagpakasal, yung mga nag-aral ulit because during a pandemic, there's online classes abroad that you can attend already in your own homes. So it really changes and every person has different aspirations or goals in life. And if you take a look at it, it's either growing your money to have a car, like what I mentioned earlier, or for some, open up a business during the pandemic. And some maybe are planning to extensively take care of their family by building their own home or funding their child's education. And then, of course, during this pandemic or even after, what we need to do is still nurture our health physically, mentally, and emotionally. So we still need to pay for our extracurricular activities. And lastly, I want you guys to use your chat box and type there me if you want to enjoy your retirement. And by doing so, you have to have enough for your living expenses. So ako dyan, sasagot ako me. So meron dyan nagsabi, me and super me. And thank you, gosh, diba? So everyone wants to have a fruitful retirement. So those are actually our aspirations in life. Pero bigyan natin ng numero, diba? Realistically speaking, when we talk about our financial goals, let's put numbers into it. So, wag kayong malulula. These are just estimates, no? So, if you want to buy a car na pag pumarada ka at sinundo mo yung girlfriend mo, hindi ka mahihiya sa kotse, ayan, 1 million. For those that also want a house or a condominium, whether it's a gated community or whichever, 5 million sabihin na natin. For a business, sabihin mo na gusto mo magluto ng adobo araw-araw at ibenta yun tigpa 500 pesos. Ang mahal no? 500 pesos adobo. Baka isang galon yun. So 500,000, 'di ba? Estimate mo for a business venture. Para sa mga gusto mag-aral kahit online, meron akong mga nakikita online classes. 1.5 million abroad. Okay? But you're not leaving your house, you're just in Zoom. So for those that want to nurture their health, or their health physically, mentally, emotionally, sabihin na natin 1 million. And dun sa mga sumagot ng me, super me, sabihin na natin 12 million para talagang tigil trabaho ka, but you have to have enough to get your retirement started. So, di ba, ang laki? If you add that all up, those are our financial goals. And we just don't realize it because we spend it on a daily basis, and we need to compartmentalize that life stage. Where do you want to achieve that life goal? Diba? Which life stage in particular? And a lot of you are millennials here, getting started and building confidence and independence. I would reassure you that you have a lot of time in your hands to actually save up for now. For your retirement later on, you need to start now because you have a lot of time in your hands. And for those moving up, and preparing ahead, it's really all about the family, the extended family as well, yung mga tinutulungan din natin, yung mga may sakit din ng mga tinutulungan natin. It's all about that. And some of you are also in your 60s and above that want to also leave a legacy later on, no? But most of you all are also waiting for planning or aiming for a fruitful retirement. And that's what we need to all prepare for, diba? Because that's really the end goal. No? So when we take a look at it, I'm sure you guys are asking this question. And I encounter this from a lot of investors. No? What is asset allocation? What is this, Queens? Asset what? And do we really need to? I mean, come on, yung mami ko dati, isa lang ang fund niya pero kumita siya ng milyon. Or hindi, dati yung kapatid ko, ganito lang ang kinita. But that was back in the day. Right now, most of the trades are sentiment-driven, given what's happening today in the market. And it's so uncertain that uncertainty is equivalent to maximum opportunity. It doesn't come so often. And that is why asset allocation plays a very, very important role right now. So let's take a look at it and let's put an analogy to it. Let's consider a well-nourished meal. And any healthy meal would consist of the appropriate amount of carbs, the proteins, the fats, the vitamins. Hindi pwedeng masyadong madaming carbs kasi tataba ka naman. Hindi naman masyadong palaging madaming bad oil kasi bad cholesterol yun. Pag good cholesterol naman, sige, okay lang. Vitamins naman, hindi naman pwedeng hindi ka kumain ng carbs, ng fats, and ng proteins, tapos iinom ka lang ng vitamin C na tablet. Siyempre, di ba? Hindi naman maganda yung ganun. And kung hindi ka naman umiinom ng tablet, kung natural vitamins like fruits and veggies, sobrang payat mo naman pag nangyari yun. Di ba? So proteins on the side, that's what we call, yung lean proteins that you want to be sexy and fit and healthy and all. Okay, but of course, you have to maintain a certain weight for your age. And that is why you need a composition of all. Huwag niyo po akong gagayahin kasi today, ang kinain ko lang po, para sa mga millennials, hindi ko alam kung alam nito. Itong wrapper na to. Ang makakahula nito, siguro pwedeng i-PM or i-chat dun sa chat box kung ano ang wrapper na to. Ito po ang kinain ko the whole day for energy during this webinar. So, wag niyo po akong gagayahin. Pero pag nakahula po kayo kung ano po ang wrapper na to, ibibigay ko po kay John para po makapag-reach out kayo at meron po kayong special price. Siyempre, ang special price itong wrapper na to. O, di ba? O, pinakita ko na mula. So, of course, wag niyo siyang gagayahin, di ba? And I'm seeing people answer it. Laptops, yes. Dieter, you won. Congratulations. So I hope you can message your email address to John, and probably I can get it so that I can give you laptops and mail it to wherever you are. I hope you're not from Dubai, because gosh, baka mahal yung shipping fee. Pero nonetheless, congratulations. So okay. So let's go back to the analogy, diba? A balanced meal. And when you have a balanced meal, you will be able to help nourish your body and not cause too much risk to your health. Diba? That's what we all are aiming for. Good health during the pandemic. And that's exactly what asset allocation is. Because when you combine the returns of different asset classes, they are not perfectly correlated. What do you mean by that? Asset classes move in different directions. No? If bonds are up right now, it's not stocks that are performing. If interest rates are up and cash is king right now, and people are investing in time deposits and savings account because interest rates are high in banks right now, it's not the bond market that will it's not the stock index fund that will be performing. No? And similarly, when stocks are up, bonds are down because by the time it's not interest rates are down, and that's why people are flocking into the stock market. So nag-iiba siya. And when you diversify all portfolios across all these asset classes, you have the bonds, the equities, the cash. Isama mo na yung real asset class, yung property, and for some may commodities pa. That will help optimize risk-adjusted returns. So what do you mean by optimizing risk-adjusted returns? When you combine all, and since not all move in the same way, definitely there will be one asset class or two that will be negative at a given time. But because you have a combination of all, in terms of weighted portfolio returns, magiging positive or even not so negative ang portfolio mo because you have other, kumbaga, treat asset classes as other engines that are working for your portfolio. So if you have other cylinders in your engine that are working for it, then tatakbo ka pa rin, gumagalaw pa rin yung returns ng fund mo. Except, unlike if you have just one asset class, let's say you have only equities, and equities went down to as low as 4,600 last year. Definitely, because you're only exposed to equities, when market goes down, bagsak ka din. And that's why what we are avoiding is that negative return to happen and that heavy exposure to a client. What we want is diversification. So going back to that analogy, similarly, asset allocation consists of the right mix of different asset classes. Okay, provided that your risk profile allows it, your time horizon allows it, as well as your horizon allows it, because short-term, medium-term, and long-term financial goals, your asset classes are always anchored to all these goals. All these asset classes needs to be directed to what financial goal you want to achieve later on, whether short-term, medium-term, or long-term. And when that happens, you would be in a perfect position not to panic. And that's what we're avoiding, the panic, diba? So, of course, if you think about it, unfortunately, and why am I saying this? Unfortunately, asset allocation is not given importance by many investors, and also because many investment portfolios are heavily exposed towards just one or two asset classes, diba? So, an example would be that a client is into short-term financial goals and he needs the money to achieve this financial goal in 1 to 2 years' time, just like what I said earlier. But because, there's a mismatch in the financial goal, which is short-term, and the investment, which is in long-term, what happens is that when he needs the money right away and the market is down, he has nowhere to go and he needs to still source money elsewhere because lugi yung investment niya, ayaw niyang i-pull out. Kasi pag pinull out niya, malaki yung negative at malaki yung loss niya. So once you realize that, that's it. That's your negative portfolio return already. And that's what we don't want to happen, diba? So we always need to remember risk-reward, diba? Because a lot of investors forget the risk and reward, diba? High risk, high return, low risk, low return. But we have to be mindful. Ano ba yung risk profile natin? Ano ba ulit ang time horizon natin? Ano ba ulit ang financial goal natin? Kasi hindi ka pwedeng pumasok sa isang high risk, high return, pero ang risk profile mo conservative. Tapos ang financial goal mo pa short term. So dun pa lang, 'di ba, nag-mismatch ka na. So now, I'm sure you guys are anticipating why is it important, no? Before we go to the funds, no? Why is asset allocation important? In the 12 years that I've been working, asset allocation plays a good role, a perfect role, because it eradicates irrational behavior of investors. So case in point, last year, 4,623. Tandang-tanda ko yung numero na yon nung bumagsak yung PSCI at that time in March last year during the pandemic. And that triggered market volatility and impulsiveness amongst investors. Compared to us, wherein we were diversified and we just kept coming in and going in because the market presents an opportunity. And that's what we're saying, no? When you are an investor that is diversified, regardless if market is down, super down, or even up, hindi ka kakabahan because not all your eggs are in one basket, diba? Like what they say. But of course, this is the cycle of different market emotions from Forbes.com. And when the market is up, investors that are not exposed to a lot of asset classes will keep saying, buy everything I want all in, forgetting that that is already the peak. And the only way that they will be able to buy and they want all in is that if diversified pa ba sila sa ibang bagay, di ba? But of course, successful investors, they normally recognize this as a point of maximum financial risk. And the only time that they'll probably buy on top is because you want to hold on to it much longer than the usual, because you're expecting that later on that will be higher compared to the current value of it right now, di ba? Now, what about when market is down? When market is down, an investor that is not diversified that much will tell you and call you, I want to sell right now. I want it all out because I'm panicking, wala na akong pera and all of these things. Why? Because nilagay niya lahat doon. And a successful investor will recognize this as a point of maximum financial opportunity. And that's what we want you guys to do. That asset allocation does not drive through sentiments. And besides that, it needs to steer through fundamentals and financial goals. You always need to bear in mind a financial goal that is related to that investment outlet of choice. No? So of course, if you're able to diversify, it drives investment results. Why? Because the diversification to many asset classes or to even more enables the portfolio to mitigate downside risk. What do I mean by that? No. So of course, we take a look at the asset allocation. You also take a look at the asset class selection. Alin sa mga 5, bonds, equities, cash, commodities, real property ang i-expose mo yung sarili mo into related to your financial goal. You also need to have your own research, and that's why we have these market development webinars. No? And thanks to John and team for spearheading this one. Patience and time, you always have to have that kasi kami nila John, and here in Sunlife Asset Management, patience and time, that's all in your hands. And the best portfolio performances are not derived by the best schemes or asset classes. Even fund managers would be honest about it, that when they invest, they don't have all the positive performances. May mga iba dun barely making money or what, diba? But because overall, it's a great result of diversification of different asset classes collectively. So in Sun Life, in terms of mutual funds, because what we want is a pool of funds, no? For those investors heavy on investing into mutual funds, I would encourage you guys to actually diversify and reassess your portfolios on what currently you have in terms of your MFs and UITFs. No? Do you have money market funds? Do you have bond funds? Do you have balance funds? Do you have equity funds? Because right now, it's really timely for you to assess what you have, and maybe pag may kulang at konti, you have to match at your financial goal so that you will be able to assess na, ay, kulang pa pala ako sa long-term investments ko. And so therefore, you will add to the World Equity Index Feeder Fund. And that's why you need to be able to do your research. I've highlighted here the best sellers in Sunlife Asset Management, namely the money market fund for short term. For those moderately aggressive, the bond fund and the dollar starter fund. And then for the equity-laced funds, it's the stock index and the equity fund for peso, particularly also the World Equity Index Feeder Fund that's exposed to global names but using pesos, no need to convert your pesos to dollars. And for those holding dollars, sa mga hindi makatravel at nandyan lang yung mga dollars nyo sa wallet nyo, World Voyager Fund. Okay. So we'll take a look at that shortly. And here's a snapshot on where it is, no? So let's relate it to this one. Taas ng kamay, yes, yes, yes. I know Farmville. So use the chat box function to confirm if you know this. Kasi syempre, a lot of you guys are millennials. I hope you guys have been playing this game, no? So, of course, if you take a look at it, Farmville, diba? Oh, yes. Okay, so you guys know this game, gosh. Farmville in Facebook. Yep, correct, John. Okay, so yung iba not familiar, but let me walk you through for those that are not familiar. And thank you for participating again in the chat box. So Farmville, no, so it's a game or an app that you get to play. Ang kunyari, ikaw yung naglalaro, ikaw yung farmer, ikaw yung investor. And meron kang crops, 'di ba? So dito sa atin, in terms of investing, ang farmer is the investor, 'di ba? The farm is the portfolio. And in a farm, you have various crops that are growing. You're not just growing an avocado or a cabbage or what. You want to have a lot because hectares of land ang pinag-uusapan natin, or even, 'di ba? Malaki yung farm na yon to begin with. So the crops are the investments or considered investments. So you have also crops that grow faster, the ones that are medium term in terms of growth, and the ones that require longer time to actually gain returns, diba? So conservative, easy to grow for short term. In Sunlife Asset Management, there's what we call money market fund and dollar starter fund. Kasi short term siya, easy to grow, and it's only for short term purposes. Moderately, harder to grow. It requires about medium amount of time to actually grow. So we can consider the balance fund as that fund. And for those that are aggressive in nature, no? Those that are considered hardest to grow, yan po yung mga mahogany, 'di ba? For long-term purposes, it requires a lot of patience and time and nurturing and checking, validation, and all of these things. We can relate that to the index fund, the World Equity Index Feeder Fund, and the World Voyager. So that's just a snapshot on how we can relate it to asset allocation, because not all asset classes will provide you the return today. Some will, some won't. And that's why you need to diversify that and align that to your goals so that you will be able to easily assess ano sa mga funds ang iha-handpick nyo para ma-achieve tong goal na to. And that when you keep that in mind and compartmentalize that, it's easy for you to actually handpick it and redeem it later on because nakatag na yung certain investment outlet na yun for that certain financial goal. O, diba? So briefly, we'll take a look at investment views. No? So how is it in the market right now? What's happening right now? Where are the opportunities queens right now? No? And just a glimpse, I will not show charts anymore, no, in the interest of time. But definitely markets can still go higher. No? Global equities have already outperformed in the first half of 2021, and it's basically led by US and European indices. So if you take a look at the massive US equities, no, particularly those that are part of the MSCI All Country World Index. So for the benefit of everyone, if the PSCI is actually the barometer for local stocks, the MSCI All Country World Index is the barometer for global stocks. So it has more than 2,000 names exposed in more than 47 countries worldwide. So it's mainly driven by US equities exposed in tech and healthcare sectors. And if you know it right now, what's happening in the market right now, tech and healthcare sectors are the ones paving the way for growth because everyone's heavily dependent on it worldwide. No, you have you have Google, Facebook, Netflix, Amazon, and all of these names, no? We call it fan stocks that are there. Apple as well is part of it. And these are the ones paving the way for growth. On the healthcare side, we all know what's happening worldwide. The pandemic has caused vaccine providers to spearhead and produce all these vaccines. And we have the listed names such as Moderna, Pfizer, Johnson and Johnson, AstraZeneca, and all of these names. And sooner or later, you'll see listed vaccine providers or vaccine companies that will probably be replicating these vaccines to administer boosters later on, diba? Kasi we'll be needing it um, for a longer period of time. So that's basically what's driving markets up, and that's essentially why foreign investors are abroad, diba? They're flocking there because they know that there is growth. So these are considered growth stocks. So, of course, we maintain that positive stance that as vaccination picks up globally and even locally, as well as here locally, what we need is ayuda just as big as the US. Because in the US, they get stimulus checks, and these Americans are able to actually invest their stimulus checks. They have extra money to invest, and that's what we need, diba? And when that happens, people will be confidently flocking into the global equities essentially because of the support they're getting from the government. Now, on the equity side, we're seeing that markets in the PSCI went down to 6,500 level last week. But right now, it's already up by about 6,700. So the view for Sun Life Asset Management is that we might expect PSCI to end at 7,200 level. So if you invest now at 6,700 level, all the way up to expecting it to end at 7,200 level, that's about a 6% upside for you, diba? From today until December, potentially, diba? Assuming that it ends at 7,200 level. So amongst asset classes, what do we prefer? It's still equities over fixed income. When you say fixed income, those are bonds. No? Equities over fixed income, essentially because you can still get it cheaper. The PSCI alone has a lot of cheap stock names, diba? Whether you go direct or whether you go mutual fund basis to mirror the stock index fund, we have one of the cheapest equities in the market, no? And of course, what we need to caution is volatility, because for as long as cases are rising, Delta variants are increasing, or even other variants, diba? There might be some volatility, but don't fret, because as investors, you need to recognize that volatility is opportunity. Pag bumababa, dun tayo pumasok. Pag tumataas, hold and get in tranches so that you can cost average. So here's a cheat sheet that we formulated, no? And one of our team members in agency sales in Sunlife Asset Management formulated this so that in one look, you're able to take a look at what you want to invest in. If you want to invest in Sunlife Asset Management, no, and open a mutual fund account to start with. So it's segregated for the different purposes, short term and long term. Wala po tayong medium term dito for the benefit, for the purpose of, because fixed income is not something that we are trying to address right now, given that it's overvalued compared to equities, no? So it doesn't have fixed income for the moment. So let's assume money market, dollar starter, the PSCI index fund, the World Equity Index Feeder Fund, World Voyager for dollars. For as low as 100 pesos, any one of you can open a SLAMC account, or even for 1,000 pesos to start your index tracking with their own stock index fund, you will be able to do that as well. Or for those bold and beautiful and want to jump ship and on board because you want to be exposed in the global equities through the World Equity Index Feeder Fund, that's just 50,000 pesos minimum to start. Ang baba lang for you guys to start. And over time, you guys can come in tranches so that you get to cost average as well. So why is asset allocation important? So I'm sharing with you this calculator that computes, assuming that the investor has 500,000 pesos at nilagay siya sa 20% money market fund, 30% stock index fund, 50% World Equity Index Feeder Fund. Ano ang magiging potential weighted portfolio return niya pagdating ng panahon? So sabihin na natin medium to long term ang approach niya. In 3 years, you can potentially get 17%. In 5 years, you can potentially get 45%. But what we want to highlight here is that notice that even in the past returns, you have the index fund that was performing negative. No? So even if you have something negative in your portfolio, asset allocation provides that power na allows you to diversify and at the same time improves your weighted portfolio return, essentially because you are exposed to other assets that are providing growth for your portfolio. So that's what's nice about diversification. And the beauty of diversification suggests that the more diversified you are, and if you just put in the correct asset allocation depending on your risk profile, you will be able to achieve a positive weighted portfolio return. So we're leading to that number 3, because when you're diversified, it aims to provide good returns across market cycles. And I want to highlight that different asset classes may underperform or even outperform each other in different market conditions. And case in point, no, this is something that we got from Investopedia.com that illustrates when it's a stagflation, a reflation, or a recovery, an asset class performs or outperforms over one another, over the others, diba? So let's say example today, and this year is the theme of recovery. Globally and locally, the theme is actually recovery. And guess what? What do you see there right in the center? It's the stocks. It's the stocks that will provide that return. And essentially, we're expecting that inflation later on will keep rising, diba? And you see here, what industry is paving the way for growth. So the science behind it suggests that it's really what's happening now. It's the stocks that's providing growth and will potentially provide growth during our recovery period while inflation is picking up, as well as tech sectors will be paving the way for growth as well, particularly that one. And we also have to tuck in a bit of healthcare because right now it's a different time. The pandemic suggests that we are all dependent on healthcare sectors as well. So that's the one that will provide that degree of stability. Once you have that diversification, researching will do, important yung market knowledge as well as patience and time. And when you say time, it doesn't mean na porke 5 years ang financial goal mo, kalimutan mo na yung investment mo and take a look at it after 5 years. No, I will not encourage that. What I will encourage is that you always have to check your portfolio and rebalance it, because that's what's key for you to determine whether you need to cap your gains or move it to another asset and all of these things. So here's a sample portfolio allocation, and relatively it suggests the suggested asset classes that will be aligned to that particular risk profile. No, so to cut it simply, it's aggressive, moderately aggressive, conservative, so that you will be able to determine kung aggressive ka, dapat ito yung suggestion more or less when it comes to you having exposure in the index or equity fund. And your money market fund should be more or less this much. Diba? So, portfolio rebalancing. Why is it very, very important? It doesn't mean just because you're well diversified already or you're practicing asset allocation. It doesn't mean that you don't revisit your portfolio. You always need to. And if an investor asks me how often do you need to monitor your portfolio, normally there are some clients that do it on a monthly or even daily basis. But rebalancing a portfolio would be more or less 6 months to 1 year, so that you have a spectrum of market movements already. And that's very, very important because you need to align with your goals relative to the market movement as well as the market conditions. Because once you review it, you need to be able to check if these asset classes that you're invested in have grown or if they've gone lower. Because if they've gone lower, you need to assess what else can you do. Do you still cost average and all of these things, given that there's still opportunity and all of that, diba? So that comes into play whenever you do portfolio rebalancing. So let's go back to the how, no? How to invest in a mutual fund. So in Sun Life Asset Management, no, we have this platform, what we call MF Online app, wherein that investor can open a mutual fund account through this website. All you need to do is visit www.sunlifefunds.com, and this is available for peso clients, no, for peso funds only for individual accounts. So if you guys want to get started, para lang siyang nagiging verified sa isang app, di ba? The limit to open is 300,000 pesos, but once you're verified, you can actually add more to your investments, no? And with that, it's as easy as steps 1, 2, 3, 4, 5. Go to sunlifefunds.com, select a fund of choice, fill out the digital form, upload a photo and a selfie. So ganun po siya ka-millennial. And upload a proof of payment. And I hope you can watch this video so that it can illustrate the easy steps I've described today. So watch this.
Want to start investing in the Sun Life Prosperity Funds? It takes only a few steps. Go to www.sunlifefunds.com to know the different types of mutual funds available. When you find the mutual fund that fits you best, click Buy Now. Accomplish the online application page. Upload a clear photo of a valid government ID with signature. Read the terms and conditions. Click Agree to accept. Review your order details. Select the mode of payment. That's it. Easy, right? A confirmation of your subscription will be sent via SMS or email. Congratulations! You're now officially a Sun Life Prosperity Funds investor.
So that's it. Easy, right? So I hope you liked that video. And here's a cheat sheet that I prepared that addresses the 4 or 5 easy steps before you invest. So, of course, we have what we call determining your lifetime financial goals, whether it's short-term, medium-term, and long-term. And then you also have step 2, which is establishing your risk profile, whether you're aggressive, moderately aggressive, or conservative. And of course, market knowledge, no? You need to also study the different asset classes, whether it's property, commodities, bonds, cash, as well as equities. And you need to be able to know whether you want passively managed, actively managed, value investing, or growth investing. And of course, step 4, determine your asset allocation model. No? What do you want? What's the selection? What's the asset class selection you want to do aligned with your financial goals? You also have to entail some market knowledge before you invest. And it requires patience and time aligned with the 4 pillars of lifetime financial security here in Sun Life Asset Management, namely liquidity, protection and health, accumulation, investment, and as well as wealth transfer. And lastly, once you've decided, you can open a SLAMC account. Just visit www.sunlifefunds.com to get started. And that's it. That's how easy it is to be able to invest again. So with that, I guess it's a wrap up, and that ends our discussion in investing styles. Which one is for you? I hope you're able to determine which one is for you, really. And, once you on board, visit that website to get us started. And once again, this has been Queens Ornedo from Sun Life Asset Management. Ingat po guys, stay safe, get vaccinated. And with that, I'll turn you over back to John.
Thank you very much, Queens. And guys, a virtual round of applause to our resource speaker this afternoon, Miss Queens Ornedo, Territory Manager for Metro Manila from Sunlife Asset Management Company, Inc. And of course, thank you to our participants for sending your questions. We really had an engaging discussion this afternoon. And thank you to, of course, our speaker and to Sunlife for pinahiram nyo sa amin si Queens. So hopefully in the future, maka-invite kami uli. If not Queens, probably someone else from Sunlife to share insights with us. Yun. So, with that, ladies and gentlemen, I would like to thank everyone. So you need to get in touch with the PSE. Our contact details are 632-8876-4888. You may also email info@pse.com.ph. For corporate information, visit our website www.pse.com.ph. For disclosures, visit PSE Edge. And for investing materials, visit the PSE Academy website. Watch out, we are going to roll out a new PSE Academy website very soon. And of course, we are active in social media. Like and follow our official social media accounts. We are on Facebook, Twitter, Instagram, and LinkedIn. And for those who are asking for copies of the slides, please do visit our YouTube channel. And while you're at it, subscribe and hit the bell button so that whenever there are new videos uploaded in YouTube, you will get notified. You see, guys, all of our recorded webinars, the edited version, are uploaded in our YouTube channel. And the live recording will always be available at our Facebook page. And download the PSE mobile app, so PSE Ed for information right at your fingertips, and the PSE Easy mobile app for whenever there's an IPO, and some follow-on offerings too. The PSE Easy mobile app is the one for you. And there you have it, ladies and gentlemen. Another learning-filled afternoon brought to you by the Philippine Stock Exchange. Investing Styles, which one is for you? Featuring our resource speaker, Queens Ornedo from Sunlife Asset Management Company, Inc. This is your host, John Garcia from PSE's Market Education Department, wishing you all a happy weekend. Please stay safe and well. Until next time, I'll see you again.